The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we closed out the week of trade on Friday and closed out Friday's session, we found some real good strength in corn and soybean futures with mixed action in the wheat trade as we rounded out the session after the September WSDA report was released from USDA. Some interesting notes there. We're going to take a look at things and talk about it. Joining us now, Brian Doherty, Senior Market Advisor with Total Farm Marketing. And Brian, good to talk with you as we wrapped up the week of trade on Friday. Let's start with that WSDA report. And I think the biggest headline out of that a lot of folks have been talking about is we got a drop in the national average corn yield estimate as expected, but we saw acreage go up.
Yeah, no one was. I don't think anybody was really expecting that. Excuse me, a little bit of a cold. Yeah, so acreage went up. In both corn and soybeans. So that's interesting. A couple 100,000 planted acres of soybeans, but corn 1.4 million. That's not a small figure. So that was interesting, but by days, well, not even days end. So as you know, I always say when you read a report, you can kind of scroll right to the bottom sometimes. Okay.
Yeah.
This is the math. You can go right to the bottom sometimes. Carry out. 290 million bushels, the soybeans, 290 million bushels last month, 300 million this month. Very little change there. In corn, it's a much bigger number and even a smaller change there. Only 7 million bushels. So last month, 2.117. This month, 2.110. So 7 million bushels. Now, in and of itself, 7 million bushels is not worth a dime to the market. Mm-hmm. I think what was worth a dime to the market today is several things. Some short covering. That would be the technical when prices start to move, and they can cover buy orders, buy stops typically. But really, Jesse, I think it's twofold, two-pronged. One is, how many more acres can we find for corn, for crying out loud, right? I mean, we've got to get, the market's got to be exhausting its biggest numbers. And then probably more importantly, just the early yield results I'm hearing probably have, one, they reflect the smaller USDA number today, and two, where farmers are going, in particular in the South. It's been a tough year, too wet, then too dry, so disappointing yield results, but also hearing some, and I think I might have said this last week, but I just cannot get my hands around this rust issue.
Yep.
But it's out there, and we're hearing about it, and we're hearing lower yields in fields with rust. So the market moved, and it had a really strong close today, which is very impressive at the end of the week on a neutral report after the market had already moved higher. And both corn and beans had impressive closes. To your point, wheat was kind of the laggard, did finish a couple higher in Chicago. But nothing of consequence there. Kansas City up a penny or two as well. Call Minneapolis unchanged. So yeah, lots of numbers today. You can delve through all of them or just read down the page to the carryout. Not much change, and I think the market was okay with that today.
Yeah, and I think about this December corn closing 430, essentially right at the high of the day, a tick off of it. We're a quarter penny off the high of the day. November beans, just a couple of cents off the high, 1046 at a quarter. And I know that those numbers on the board price different than the cash price out there, the countryside in many areas. Some places significantly different, but you wonder, a good close like this, if we can carry the momentum into this next week ahead, could that give farmers some opportunity here in these markets for corn and soybeans, Brian?
It does. And in fact, we're really close, I think, on corn of rewarding a rally. Well, what does that mean? Well, there was a gap left in July, back in July 3rd to be exact, at 432 3/4. That's the top side of the gap. And then the bottom side, I got to double check, but I think it's 430, maybe 432. But the point of it is that that's been a target forever. And all of a sudden, the market's knocking right on the door of that target. So 430 1/4 is the bottom side of the gap, and that was also today's high. So we're right there. And that would also be a 10% increase in the value of corn off of the low. So you and I have worked together a long time. I always kind of make the point that, and especially this year, farmers are light on sales. There's going to be a big crop, just how big. But once you kind of get to that 10% increase in value, if you've been thinking about making some sales or want to hedge to arrive or do something, right? This can disappear kind of quickly, and hope to be wrong and hope to sell more if we get additional rally. I've got an inverted head and shoulders formation that points to that 450 area. And then maybe there's other things that could push the market, but carryout's still big enough that I think it's going to be hard to sustain a rally without a catalyst.
Well, and a lot of times you talk about things like momentum in the markets and perception and the attitude in these markets. And just seeing a good close like this on Friday after a WASDE report that threw us a lot of numbers and a couple curveballs, I have to hope that maybe the momentum here continues to the upside to give producers who really, to your point, that they've struggled all year with prices, with disease issues, a lot of things. It'd be nice to have a little bit of positive momentum here into harvest, Brian.
Well, and really that momentum started a month ago. You go back to the August report. It was a big report. The market closed, I think it was 13 cents lower that day. By the end of the week, which now I don't remember what day that was, but the point of it is corn finished 1/4% lower on the week. And that is not, when you get a big increase to carry out, that's not what you expect. So it has been building some momentum. I think the big picture, if you step back, we talk about momentum, we talk about perception. I think the perception is that the managed money has been reducing their positions for a month now. And we chart that, and then we chart the last 5 years, and they've been basically doing the same pattern the last 4 or 5 years. They don't get much short after this time window. So I think, a lot of times when you look at the market and go, oh, those funds are driving the market. Well, they may have been driving it today on the close, exiting their positions. So, and they may have more to go. So that's the good news. They did drive it higher if you might remember last winter, last December, January, Feb, when the market peaked. We were looking at similar type fundamentals, and they went from net short to 200,000 contracts long. So watch the money flows. My point. You've got some nice targets. If you need to make some sales, to consider getting some orders out there.
Brian Doherty, Senior Market Advisor at Total Farm Marketing, is with us here today on the program. Let's talk livestock a little bit here, Brian, and then we'll let you go to rest up and take care of that cold. Cattle, tough down day Friday, and really a week of volatility across cattle futures. We go sharply lower. I know we had the limit down day early in the week, then we gained some back, and now here we are finishing the week to the downside again. What's your perspective on this cattle complex and all that volatility this week?
So I'm taking a peek right now as I'm talking. I just want to see if there were any updates here, but I'm looking at the cutout values today, and they were off quite a bit yesterday, down 485 on the choice and 375. This morning, down 61 on the choice at 400.18. Now, remember, they kind of blew right through 400. Now they're coming back down to it. Select's down $1.68. So let's start with that. That looks a little tired. It's had a heck of a run. Bull markets are going to have pullbacks. So the bulls are going to argue, look, this is really healthy. We've needed it. We had too much up. We gained 16% in value. I think it was 16, 17% in value in a 6-week window. You can't sustain that. So it's a nice technical correction, one that is healthy in a bull market. Then again, we're at all-time high prices. And can demand hold up? I think the big news this week was that the cattle market did have some volatile days, and they were down. The jobs number was not supportive. So you have concerns with can demand keep up? At least I think that's what surfaced this week. We talk about perception. I think that's the perception I'm starting to get a feel for here. The cutouts are down. Board looks like it tipped over. But what I don't have is I don't have like big signal at the top of a market that a big bearish key reversal with a stochastics crossover and way overbought conditions. We've had steadily overbought conditions in an uptrending market, both in futures and cash, but it is looking a little soft or tired this week for sure. And I can't read too much, just to not babble on, but I can't read too much in the $6 or $7 down on feeders, because when you're at such a high level, that percentage change is still relative. So it's a lot of money per contract, but it's not a lot compared to feeders were half this price.
How about over in the dairy parlor, seeing a fair amount of red and substantial weakness in butter? I think down 6, almost 7 cents on Friday. I mean, when you look over this dairy trade, what stands out to you, Brian?
It's a tough market right now. That's what stands out. Cheese, the demand hasn't cycled in. This can be a time of year where it does. But I think we have to go back and kind of put the pieces of the puzzle here. We haven't had favorable export markets in the sense of global dairy trade. So that's one. But we haven't had favorable production reports either. They've continued to upgrade the herd and show more and more production. As an example, I just ran some numbers now. So, and we'll get a new report out here in September, but on the August report, which is reflected through July, 8,000 cows more than in June. So everything's relative, right? We're milking 9.04 million, so it's a small blip, but it's a blip in the bigger category. But 154,000 head more than a year ago, and so that's a lot of production. Milk per cow, Jesse, up 36 pounds above July 24 for the month of July. So figure there's 31 days. That's a little more than a pound a day on average you're getting out of each and every cow. So it's an efficiency, it's production, it's beef prices for calves. You want to keep those cows in. It's low priced inventory from the feed standpoint and good hay for most of the Midwest. It's just a tough scenario where we just haven't seen the demand, which has responded over the last couple of years when we have these pullbacks. But we need to see that cycle in a bigger way. That just hasn't happened yet.
Brian, I should ask you as well, the outside markets, stocks and more, and a lot of talk of a potential rate cut from the Federal Reserve at their meeting coming up here this week ahead. I know the University of Michigan Consumer Sentiment Index, the preliminary report had a pretty sizable drop out this morning. Overall economy, any thoughts for you heading into a potential rate cut from the Fed?
Well, I think we need to kind of, again, sort of segue or differ between the economy and the stock market, right? Mm-hmm. Some of the markets. So the gold market continues to look very strong, reflecting expectations probably for lower interest rates. So money has to try and find bull markets. Well, that's a bull market. And an investment there that when you see gold move like it is, I think the concept is that, well, we want to put our money in gold, maybe not into the new high equity prices. And that may be the shift you're starting to see in row crops with corn and beans, is that you may be seeing some money come out of the row crops. They're just, I'm going to keep using that word, cheap from a historical perspective. And you buy cheap. You buy stuff when it's on sale. And when it's on sale, I was out in North Dakota this week. These farmers just are struggling. They can't make any money at it. Well, somebody uses it, that's working for them. So I think the investment community might be starting to look at this with a much sharper eye. What we don't have is a big weather event coming up anytime soon, other than trying to get the crop harvested. I don't think there's anything there that the investment community would say, oh, we had a serious frost, we're going to buy. There was frost and there was some things nipped, but I don't think enough to say this is a damaging equation for the crop.
Brian, anything else final you would mention or reiterate to folks here as we close out the show today?
It goes back to marketing never takes a day off. So let's just focus on dairy. It looks very poor in the charts. And when prices rallied back a while ago, there was a lot of optimism. We were going to see some of this and some of that. We didn't see any of that. So it's still having to manage the risk on a price. Outlook is fine, but outlooks can be right, and the market still not work. So we could have smaller cows and the market still go down, or the outlook can be just wrong. So marketing doesn't take a day off, so keep emphasis on strategy. As far as the corn, interesting concept right now. We're getting a bit of a bullish tone to it. That's fine, but don't back yourself into a corner where you either sell the whole crop or where you're not selling anything. Just remember, there's big supplies out there. Keep rewarding rallies, incremental sales. Don't be all right, all wrong, at least to get the ball rolling. And if we do get a good pop out of this, well, then make it a good year.
Brian, if folks want to reach out and talk with you there at Total Farm Marketing about their marketing strategy, how can they get in touch with you?
I think the easiest way to get in touch with me is to give us a phone call, 800-334-9779. Let's start with that. And then we'll go to email, Brian with a Y at totalfarmmarketing.com, or look up totalfarmmarketing.com on the website. And we got great stuff there. So 3 ways to do it. Prefer the phone call. Like to hear the question. Like to hear the voice and the inflection.
Well, we always appreciate the time and insight. We'll let you go, and we hope you get well soon, get over that cold. Brian Doherty with Total Farm Marketing. Thanks for joining us here on the show today. Always appreciate it.
Jesse, thank you. Much appreciate the opportunity.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.